Hi everyone, in this video I'm going to highlight the 10 best growth stocks to buy in February. So let's get right into it. First two I'm going to recommend is Airbnb and the Walt Disney Company, both of which are benefiting from the unleashing of pent-up demand from travel for customers. The companies are growing nicely. Airbnb's growth came down after exploding during the initial economic reopening, and in the most recent quarter Airbnb grew at 29% while the Walt Disney Company grew at 9%. This growth is likely to persist for the rest of 2023, probably into 2024, depending on, of course, the major risk is if there's a resurgence of COVID cases and if there is a steep economic recession that causes people to withhold spending on travel. Other than those two occurrences, these two companies should experience a greater share of spending from consumers who were tired of being cooped up at home for the better part of 2 years. And the stocks are not that expensive either. If you look at their forward price to earnings ratio, Airbnb at 34.94 and the Walt Disney Company at 26, near the lower end of where they were trading at, according to this metric, going back all year, going back before 2022. So you're going to get good growth. You're going to get good valuation with these two. That's why they're two of my 10 favorite growth stocks to buy in 2020 in February. The next two growth stocks on my list are Visa and MasterCard. The two have been growing double digits and in the most recent quarter 12 and 11% growth. And these two, of course, are payment processors. They take a percentage of every transaction. So inflation is a tailwind for Visa and MasterCard because if you're going to pay $110 for the same basket of groceries this year compared to $100 last year, that's an extra $10 of spending. That's an extra 3% on that $10 that Visa and MasterCard are going to earn. So it's a nice little tailwind for Visa and MasterCard revenue going forward. As well, they're also going to benefit from the unleashing of pent-up demand for consumers to go away from home to spend money, going out, traveling, and doing all that stuff. So that's a tailwind for them as well. And these two are not expensive either at a price to earnings forward ratio of 30 for MasterCard and 27 for Visa, at the lower end of where they were trading at going all the way back before 2022. The next two growth stocks I'm going to recommend for February is Microsoft and Alphabet, Google, the home to Google. The two growth rates are slowing right now as consumers are changing, right? I mentioned consumers are not spending money online anymore. They're buying things away from home. They're traveling, they're going out to restaurants and all that stuff. So the growth rates are decelerating. However, I see that as an opportunity to buy these two incredible businesses, right? Microsoft and Alphabet are extremely profitable. They've shown decades of profitability, decades of excellent business performance, and so you want to get in these stocks right now while the sentiment around the names is not as enthusiastic. And that's you're going to be able to buy these stocks at, in my opinion, bargain valuations. A forward PE for Microsoft of 26 and a forward PE of Alphabet of 18.76. So you've got two incredible growth stocks at bargain valuations. Add these two to the list of 10 stocks to buy in February. The next two growth stocks to buy in February are Starbucks and Domino's. Starbucks and Domino's growing modestly 7% and 3% in the most recent quarter. Of course, Starbucks is going to catch a tailwind from the reopening economy in China. Starbucks has a meaningful presence in that region, and that's where a lot of its growth is coming from when it's opening thousands of 1 or 2,000 new stores, new locations. Most of those new locations are going to be in China. That's going to be the primary center for growth for Starbucks, and so that's a tailwind for that. And then Domino's, in my opinion, is going to capture more consumer spending as inflation pinches consumer budgets, when they look for when they look for a meal that's already prepared, Domino's is a very budget-friendly option to choose for families to feed themselves if they don't feel like making or preparing food at home. And so I think Domino's is going to benefit from that trend. Also, the stocks are not expensive either. Starbucks trading at a forward PE of 31.5. Meanwhile, Domino's trading at a forward PE of 24.54. And so add these two growth stocks to the list of the best growth stocks to buy in February. Finally, the last two growth stocks to buy I'm going to recommend is Etsy and the Home Depot. Etsy, of course, the online custom-made goods retailer that's really just a platform that brings together buyers and sellers and does an excellent job of just being an asset-light business model. If you've been following my channel, you know that I love these types of asset-light business models, and so that's why Etsy is one of my favorite stocks to buy right now. The Home Depot, it's just a company that's got an incredibly strong defense around its business. It's going to be difficult for anyone to encroach on its business. The closest one being Lowe's, of course, its primary competitor. But I'm seeing it being able to defend itself against the Amazons of the world because of the types of products it sells. It's going to be difficult for Amazon to sell the types of products that Home Depot sells online and offer fast and free shipping on those products because they're so heavy and so big and bulky, right? Imagine delivering a 30 by 24 piece of plywood for Amazon. That thing is going to cost more to deliver than it might actually sell for. And so and Home Depot has a lot of those kind of products. It's demonstrated over the last decade that it can protect its business from Amazon. It's grown its revenue at a compound annual rate of nearly 8% over the last decade and 5.57% in its most recent quarter, as the company kind of it captured a tailwind during the pandemic when we were spending more time at home, painting every room, making changes to our home. But now that we're not spending so much money on our home anymore, revenue growth is decelerating, but still positive. So that's impressive. And valuation is also very favorable for Home Depot, trading at a forward PE of just 19.29. And Etsy also is got favorable valuation, trading at a forward PE of 33, near the lower end of the range over the last 2 years in this metric. So there you have it. Those are my 10 best growth stocks to buy in February. Thank you for tuning in. I hope you have an excellent month in terms of your portfolios and health. I'll see you next time. I'll see you in March for my March growth stock recommendations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.